Welcome back to Anatomy of a Trade. Today, I'm joined by Roman. This is Franz, and we're going to take a look at a trade that was done in the S&P 500 Spider ETF by Chem, who was a student in the spring WTC2 class. So why don't we take a quick jump into his trade, Roman, and over to you.
All right, so we're seeing that this is in Spider's 3-minute time frame. We're seeing the post-market and pre-market activity. Just judging from what has happened here, we're seeing that we were in the downtrend. I'm not sure about these lines, what they represent. Do they represent some kind of, maybe like resistance here and the support here? So that way, we're looking at the support and the resistance of the pre-market activity, which is important. You want to understand, where you might have some kind of stop in action, consolidation. My advice also really quickly here would be to look, and I'm sure that Jim actually looks at that, at the yesterday's high, low, open, close. So those are important elements of your analysis from the previous day as well. And then right away, we're seeing that a huge change of behavior is taking place. Why is it a change of behavior? Well, there is definitely a lot of buying against the selling in the pre-market. Secondly, the result of it, the extension of it, is quite substantial. We're covering more than 80% of the decline. This is pretty stable. We see that supply is coming in, all of those supply tails. It shows us that selling starts to occur, and yet, we are moving up every time. There's definitely diminished momentum right here, suggesting that we might actually top, that we might actually, have some kind of reaction. And then reaction, looking at the retracement, is only about maybe like 30%. So extremely healthy. There is nothing in the volume signature that suggests some kind of threat of the reversal or distributional type of volume signature. So that looks to be like a very, very, useful information. So from this point on, what your bias for the day is. It's to the upside. So now you're looking for trending trades that are going up, and also for the counter trending trades that are going down. Your size is going to be full size plus oversized, in certain situations. And then here you're going to be a probe type of undersized type of, amount of the position that you're going to have. Also, you have to think about the targets. So extended targets and then limited targets, for those two type of trades. And then off we go with the trade itself. Franz, what do you think about the actual trades, or whatever happens to the approach to the point of entry?
Well, a couple of questions even before we get to that, Roman, for you, real quick. There's that one huge bar around 8 a.m. That, to me, potentially indicates it might be some sort, was definitely an anomaly, and it might indicate some initial tip-off to what the bias might be coming into the day. Because we do have that big, it's obviously got a supply tail, but it creates so much, it achieves so much vertically even before we get into the day. So that's number one. And then secondly, looking at the trading range itself that Jem has outlined for us here, and looking at those two vertical bars, I think he's trying to identify what we would call phase C. And I like the indication of a change of behavior, an attempt at a change of behavior right at the beginning of that first bar, and then an additional, so that's the first test, and then we come back down into the range and basically don't make any follow through to the downside, then off to the races. So we go back up to the resistance that was created by that first move up and the loss of the momentum, and that's where the entry occurs. And it's hard to tell, Roman, I can't really tell if the entry is made on that little reaction or where it's occurring in there. But potentially, I would think that a really good entry would be if we could do something after that little reaction. We see how much it comes down, and that it doesn't really achieve anything, and then off to the races. But that's basically what I'm seeing. So over to you.
Yeah. I thought that the question is going to be, France was going to ask me, like, are you okay with the labeling here? And it's kind of pretty challenging in terms of the labeling. I probably would draw a slightly different trading range. So I would want to recognize this support because it has happened multiple times. Also, this last commitment to the upside. So this could be the kind of like the boundaries for the trading range, like this. And this is your height with the extension down here. And if you look at it this way, it's still pretty challenging to label something like this, right? So like maybe here's your phase A, and then you have that weakness in phase B. Maybe your phase C is hugging the resistance, and this is your sign of strength in the backup, because characteristically you see how the sign of strength is extending in the backup, it's so shallow. This is kind of a little bit weird, so let's not even like concentrate on this. Let's concentrate on the trade itself. I definitely would have questions about the entry near the resistance. So we usually in the Wyckoff method would prefer to establish the change of behavior, establish the change in the price structure, and start entering on the reversal around this area right here. So to me, this is almost like kind of like a missed opportunity. Secondly, and please, Jim, look at how efficiency increases, right? So your price entry is much, much better. But then let's say like if you're close to the resistance, I think Franz alluded to this, wait until the reaction and then on the next reversal enter somewhere here. So that was a little bit better entry in terms of the timing. So that would be another suggestion. But the entry is still, worked out. Now, the second question, Franz, that I have is the stop loss. Where would you put the stop loss here?
Sure. For me, the stop loss would be where was the last sort of attempt by sellers that was somewhat successful to counteract the trend that we see to the upside. And it would be certainly, I would say somewhere around in the middle of the range. We see that one liftoff bar, extension bar, whatever you want to call it, just to the right of the second vertical black line that's drawn there. And I probably put my stop loss underneath that. If price were to pull back to there, we'd be in trouble. So
right here.
No, well, move up halfway up in the range. See that extension
Right here.
bar, right? Yeah, see the extension bar just on the, yeah, that one right there.
Yeah.
Right underneath that is where I think I'd be putting my stop loss.
Yeah. I mean, this is an okay level as well. It's just a catastrophic level. I mean, this catastrophic stop loss should be used for the intraday campaign that you could potentially convert or switch into a swing time frame. So appropriate, but for a specific trade. I like France's stop loss better because, well, first of all, yeah, behind the breakout bar. So this is where demand pushed above the local structure. So if we cross that, then we definitely go here. So you don't want to lose that. But at the same time, you kind of seeing that there is nothing that's going on. So like it's relatively calm, especially during the lunch hours. Also, there is a comment here, yeah, entry during the lunch hour, so kind of like a forced trade. I don't mind that. Sometimes during the lunch hours, you're gonna have your signal, and that's fine. It's just that the signal should be a little bit later right here. Okay, so we've talked about the stop loss. What happens next? Trade management. What do we see? Extension up, really favorable test, and then we go into the climactic run. Let's talk about the exit. Exit happens at 3:30 Eastern on this bar right here. I kind of see like this yellow highlight. And what I would suggest here is just, again, as we discuss in the classes, during the climactic run, how are you going to behave with your stop losses? They need to become aggressive stop losses. Why? Because you're going to have acceleration, momentum is going to increase. So you want to use your staircase stop loss placement. And here it gives us exactly that. Just start doing the combos of the significant bars, something like this, and then keep moving it. And then your exit probably would be slightly better somewhere here. You could also move it to the last bar, which is this, I don't know, what is it called, hammer or morning star, whatever it's called, any type of reversal, intra-bar reversal below this, that would be a much more efficient point of exit. Franz?
Okay, well, great. Well, the post-trade analysis, of course, we've got an 80% variance, very good trade, and it's always important to do this at the conclusion of our trade. So with that, Roman, I think we are off to the next anatomy of a trade. Thanks, everybody, for listening.
Thank you, guys.